Should you invest in real estate this year? That's a great question. A lot of people have a lot of different opinions about it. That's today's show. Let's dive into it. Hey everyone, I'm Clayton Morris, longtime real estate investor. I've done thousands of deals, and back in 2017, I left my day job thanks to passive income. I had been buying single-family homes for many, many years, and it enabled me the passive income to leave my day job. My day job was in television, so I had a pretty good six-figure job, but decided to leave because the passive income from real estate. So that's what this channel is all about, is helping you build financial intelligence and helping you quit the rat race. If you want to, you don't have to. But a lot of people do it through real estate investing. That's the way that I've done it, and I hope to be able to help you do that as well. A lot of questions given what's happening in the marketplace right now. Is the market going up or down, down or up? Are interest rates going up? Is that going to keep me from buying? So should you buy real estate in the year 2019, 2020? Well, a lot can happen between now and then, but I will point to a brand new study that just came out from Deloitte, which interviewed 500 big commercial investors. These are people who are buying up apartment buildings, buying big warehouses, and buying lots of single-family home structures as well, because they're buying multiples of these in one area. And the survey turned up really something pretty fascinating. And I want you to really unpack this, if you will, because I think there's a lot of ignorance in the marketplace right now as to what is happening in the investing real estate space. There's a lot of different areas you can invest, right? You can invest in new construction. You could buy REITs, which are REITs, real estate investment trusts, right? So you can actually buy into a stock that has real estate. That's something I avoid like the plague. You could invest in single-family homes, which is what I do. You could buy into big apartment syndications. You could do all sorts of things in real estate investing. But what they zeroed in on this study had to do, to me, the difference between buying a tangible asset and an intangible asset like a REIT. So these commercial investors were asked this question: do you plan to increase your portfolio in 2019? Do you plan to buy more real estate next year and in the year after that? And guess what? 97% of them came back and said yes, they plan to increase their portfolio over the next 18 months. That's pretty remarkable. But interestingly, they said that if they had REITs or they were invested in REITs, they are scared. And they are ready to run for the hills. Run to the exits, in fact, was a couple of their words out of this study. Why? Fears over a trade war with China. Other things that make REITs, which are already to me a bit intangible, meaning you don't have direct access to the asset you're purchasing, right? You're buying into a fund which may have access and may be buying into real estate. So when you invest in real estate, you actually own a piece of property. When you invest in a REIT, you're buying into a stock which has real estate maybe in the stock, and they can sell out pieces of that stock and put things into that portfolio and move it out, move it in, move it out, move it in. And so you're buying into that. As the great Tom Wheelwright, one of the smartest tax accountants in the country, says, why would you buy a REIT when you could buy actual real estate? You're 3 steps removed from the asset when you buy into a REIT. When you buy that single family home, you own that performing asset. You have the deed to that property. When you own a REIT, you buy into a REIT, it can go down to $0 in value and you have nothing. You have nothing to show for it. So buying into a single family home, way, way better. So 97% of these commercial investors said they were going to increase their position in real estate over the next year to 2 years, over the next 18 months. That's remarkable. Why? Why do they say this? Let's dive into this study a little bit. They said, and I'm quoting now, because prices are rising along with NOI growth. They say the real estate cycle still has more room for growth, and the pricing is attractive, and the risk of inflation is rising. Why is that important? Because real estate is often seen as a hedge against inflation. Let's put it in layman's terms, okay? Because I'm not that bright. And I like to think of things in terms of, a 5th grade level when it comes to some of this stuff. Now, and I'm not talking down to anyone, I'm talking down to myself more than anything. But if you have $1, okay, and you hold it for 20 years, because of inflation, that dollar is not worth $1 anymore. That dollar is going to be worth a lot less 20 years from now. But owning real estate often increases in value anywhere between 3, 5, you go out to some of those bubble markets, perhaps in San Francisco, 8%. So the value of real estate rises, in fact, outpaces often inflation. Therefore, it's seen as a hedge against inflation. So you're putting money into a performing asset that's also pushing off monthly cash flow to you. So go back to their quote. Prices are rising along with NOI growth, net operating income. And the real estate cycle has more room for growth. The pricing is attractive and the risk of inflation is rising. Again, a hedge against that. So amazingly, these REITs, which have seen this rocky road, a lot of them really took a big hit late in this year, late in the fall of 2018. And again, so a lot of these investors saying they're running out of REITs and into real assets. So should you buy real estate in 2019? That's up to you. We're talking about investment property here. I'm not talking about the home you live in. So if you're thinking about buying a house to live in, that's not what this video is about. This video is about buying rental investing properties that are going to produce monthly cash flow for you, which is what I do. So to me, those fundamentals haven't changed. In fact, they've gotten better. We are becoming a nation of renters. If you don't believe me, check out my video where we talk about we're becoming a rental nation. More demand for rentals than ever before. And if you're buying smart, you're buying below market, you're buying where you can get a high return on investment with steady employment in these areas with good schools, which is what I like to buy, then you are making a smart investment. So you've got a high return on investment, you've got a stable performing asset that can never go down to $0 in value, unlike your fiat currency dollar that you may have in your pocket, okay? Or unlike your stocks that you may have invested in. Real estate can never go down to $0 in value, even if the house burns down. You still own the land underneath it. And I hope you had insurance on the property, because then you'll get the property rebuilt at a replacement cost for having your insurance on that property. So that is the beauty of rental real estate. So should you buy rental real estate in 2019 and beyond? Totally up to you. I know I will be doing that. Should you buy a primary residence to live in? That's a totally different discussion, not what we talk about here on the show. You know my thoughts about the home you live in. It is not a performing asset. A performing asset is something that puts monthly cash flow in your pocket. A home you live in does not. It takes money out of your pocket every month. So totally different discussion, for a thought for another day. So do you plan to buy real estate in 2019? If you're ready to take the plunge, let me know in the comments below. I would love to hear your thoughts about what your plans are, what you're nervous about, and where you are going with your rental portfolio. Thanks so much for subscribing, everyone. We'll see you back here next time with another episode. Until then, go out there, take action, become a real estate investor. I believe it's the #1 way to build passive income and build wealth. We'll see you next time.